Okay, it's time now for a check of the top business news stories. I'm joined by our business editor, Kate Moody. Hi, Kate.
Hi, Tom.
Let us begin with this long-running trade dispute between the EU and the US.
Yeah, one step towards coming to a head, possibly. The World Trade Organization has said the European Union can impose tariffs on up to $4 billion worth of US goods over its support for the American plane maker Boeing. Last year, the organization gave Washington the right to sanction $7.5 billion worth of European goods in a parallel case concerning Airbus. Now, unlike Donald Trump's trade war with China, this legal battle dates back to about 2004. Both sides accused each other of giving illegal subsidies to their respective aerospace giants. Both sides have expressed willingness to intensify their talks to resolve the dispute once and for all, but Brussels warned that Washington must withdraw its own tariffs or face retaliation. The global economy is still facing an unprecedented recession this year, but not as deep as initially feared. The International Monetary Fund has upgraded its forecast for economic growth, while warning that the coronavirus pandemic is still likely to scar industries around the world. Ellen Gainsford reports.
Shuttered for business, the global economy is reeling from the fallout of the coronavirus pandemic. This year's recession is expected to be the worst since the Great Depression of the 1930s. Economists from the International Monetary Fund warn it's going to be a long and difficult recovery. But there is some reason for optimism.
Living with a novel coronavirus has been a challenge like no other, but the world is adapting. As a result of eased lockdowns and rapid deployment of both monetary and fiscal policy support, the world is coming back from the depths of its collapse in the peak of this crisis, which was the first half of this year.
If the pandemic is kept under control, the IMF predicts the global economy will contract by 4.4% overall in 2020. That's 0.8% less of a drop than its June prediction. Emerging economies will be harder hit at 8.1% versus 4.7% for more advanced economies. Countries which rely on hard-hit sectors, including tourism, are likely to have longer-term repercussions. Inequality and poverty are both set to increase, with women, lower-skilled workers, and those in precarious employment set to be the worst affected. In the short term, the IMF is recommending countries continue to borrow to boost their flagging economies. And to tackle the long-term economic crisis, the organisation suggests higher taxes for the richest and measures to combat corporate tax avoidance.
Let's check in on the day's trading action now. The major European indices closed lower, all sectors down except for telecoms. The DAX losing nearly 1% in Frankfurt. The CAC count about 0.2% here in Paris. Wall Street is mixed this hour. We've seen the Nasdaq slightly above the flat line there. The S&P 500 and Dow Jones each down about 0.5 percentage point there. Apple shares are down about 3% after it unveiled its latest iPhone, which will be its first with 5G capacity. Moving on to some of the day's other business headlines now. Delta Airlines lost nearly $5.5 billion in the period from July to September, a worse than expected summer travel season for America's third largest carrier. Bookings for the Thanksgiving and Christmas holidays appear to be strong so far. Delta has said it'll be delaying $5 billion worth of aircraft deliveries from Airbus as it hopes to save cash until travel demand picks up. U.S. banking giants have reported mixed third-quarter results as corporations kick off their earnings season. J.P. Morgan beat expectations with nearly $9.5 billion in profits. The bank appears to have scaled back the amount of money it's putting aside to cover possible loan defaults linked to the pandemic. Citigroup, meanwhile, continued to boost its credit reserves. Profits fell about 34% for the quarter, but earnings were still stronger than expected. And consumer groups are urging a boycott of Amazon as the internet giant kicks off its Prime Day sales. Campaigners have urged shoppers to support local businesses instead. Separately, unions around the world continue to criticize the group's safety protocol for workers during the pandemic, and warehouses in Germany have threatened to strike over a long-running pay dispute. The International Energy Agency says the world will use around 5% less energy in 2020 compared to last year, and it estimates that demand for energy isn't likely to recover until 2023 at the earliest, and potentially as late as 2025. Yuka Royer has the story.
As much of the world came to a standstill, the global energy market experienced a paradigm shift. While an economic slowdown reduced demand for fossil fuels, renewables took off, with solar power leading the way.
Solar is the new king. We expect that even in the absence of major policy shifts, renewables alone will meet 80% of the global electricity demand growth within the next 10 years.
According to the International Energy Agency, demand for oil is set to drop this year by 8.5% and for coal 6.7%. Renewables were the silver lining in the global energy market, the only area that saw growth. The agency expects renewables to overtake coal as the primary source of electricity in the next 5 years. Energy-related CO2 emissions are estimated to have declined 7% in 2020, more than the total drop in global energy demand. But that's not necessarily good news, as an economic slump also slows down the transition towards cleaner energy. The crisis has also led to reduced access to electricity in some poorer nations. The IEA is urging governments to invest more into sustainable energy to turn the coronavirus crisis into a catalyst for change.
Facebook is taking another step to police the content that appears on its platforms. The social media giant says it'll begin banning ads that actively encourage people against getting vaccinated. A blog post said it didn't want those kinds of ads on its sites. It went on to say, our goal is to help messages about the safety and efficacy of vaccines to reach a broad group of people while prohibiting ads with misinformation that could harm public health efforts. Now, Facebook had previously allowed such ads if they weren't directly identified as containing false claims. It'll begin directing its 2.7 billion monthly active users to information about getting the flu vaccine this season. Anti-vax content and misinformation about the development of COVID-19 vaccines has flourished on social media during the coronavirus pandemic. And Facebook, of course, Tom, at the very center of these kinds of controversies. It's also recently taken steps to crack down on content linked to conspiracy theories and Holocaust denial.
Okay, well, good to see they're taking action there. Thank you very much indeed, our business editor, Kate Moody. Thanks for bringing us up to speed. I'll be back in a couple of minutes. Stay with us.